Dipula today released its final results for 2013. We are delighted to report to the market that we are reporting results in terms of the management guidance that we put out. During the interim period, we indicated that we will do between 6.5% and 7.5% for income growth for a full year. We've done 7%, which is right in the middle of our prediction. That's great news, because that number is inflation beating growth in our income. But I think most importantly, what these results are indicating is that our strategy of improving our portfolio and growing it on the same basis as we've indicated previously, which is basically to retain and maintain a well-diversified portfolio, both in terms of the geographies that we cover and in terms of the sectors. In terms of that story, we have acquired for the calendar period, or for the financial year period, about 1.1 billion worth of property, and that was in all three sectors. That's made a tremendous contribution towards this growth. But most importantly, if you look at the growth in our portfolio, that's grown by 54% from the prior year, and that's through a combination of the 1.1 acquisitions, as well as about 250 million uptick in the capital values of our portfolio. We've seen very good rental, positive reversions in our rentals of around 10% on our existing portfolio, as well as a healthy retention rate of around about 76% across the portfolio. Our vacancy rate has reduced by 13% from 2012, from 10.4 to around about 9.1%. That coupled with the 76% retention rate also indicates that a lot of the tenants that would have moved out of our properties have been replaced with other tenants. I think the quality of the portfolio is certainly exactly where we foresaw it going for the 12 months. But most importantly, if you look at the quality of our tenants, that's improved. We're sitting at about 85% A and B tenancies within our portfolio. We believe that this will put us in good standing for delivering good results going forward, and our prediction for 2014 is growth of between 7 and 8% in income. It might be better, but what we've done there is we've stripped out anything that looks like a possibility and only put in the base portfolio as it stands. So any growth going forward of new portfolios that we acquire on an income enhancing basis should sweeten that number. On a combined basis, basically means that your A units get the preferred 5% growth for the year, and your B linked units would then get roughly about 9.6% of that growth. Again, sort of demonstrating the gearing effect on the B units. Just looking at the relative share price performances, B unit has performed very well, so has the A unit. We do believe that our units are a little bit underpriced at the moment relative to the sector, but our B unit priced at about a forward of 10.4 by the market at the moment, and our A unit at 8.6%. That's relative to a sector average of roughly about 7.6%. So there should be a decent capital uptick there for unit holders going forward. Our medium to long-term goals remain exactly the same. We intend growing the portfolio to 10 billion in the next 3 to 5 years, and we are investigating possibilities in the continent. Obviously, that'd be a sort of a medium to sort of longish-term goal, because it's quite a complex environment out there. We have started discussing some possibilities with parties in Africa. We're getting our minds around the structures and understanding the environments. If we do go into Africa, it will basically be on the basis of focusing on only 1 or 2, maximum of 3 countries in Africa, because it's fairly complex to try and attack the whole continent. From a portfolio perspective, our strategy is to remain a diversified fund, and in the acquisitions of roughly about 1.1 billion that transferred between this year and last year, a total of roughly about 430 million of that was government tenanted properties. That hasn't really changed our mix all that much towards government. They are the single largest tenant in our portfolio, but they're only about 13% of our portfolio in income terms. Our strategy is not a specific focus on government as such, but we do acquire good government tenant properties, and like our peers, we're able to get those long leases.